Good morning, traders, and welcome back to another daily analysis. I'm Adrian from BCR, and today I'll be bringing you the latest insights and key levels for the market. Today, I'll be covering the dollar index, spot gold, Aussie dollar, and USD JPY. Let's get right into the action. First off, we've got the dollar index. The US dollar remained flat ahead of the US trading session on Thursday, with the dollar index stabilizing above 108, but still experiencing slight selling pressure. President Trump is set to speak at the World Economic Forum in Davos, reiterating tariffs, but offering no concrete action, leaving uncertainty that supports the dollar. The market anticipates potential two-way fluctuations as suspending tariffs may trigger liquidation risks in long dollar trades, while rapid tariff implementation could weaken risk sentiment, offering dollar support. Following declines early in the week, the dollar traded flat midweek, with markets digesting the impact of a 10% tariff on Chinese goods announced Tuesday. The dollar index tested 108, but may fall towards 107. With the Fed in the media blackout and no significant economic reports, the market lacks guidance for the Fed's next moves. Technically, the dollar index shows bearish momentum with the 14-day RSI trending downward. Risks remain tilted to the downside as the index struggled below the 20-day simple moving average at 108.74. A break above 109 is necessary to revive bullish momentum, while failure to hold support around 107.63 to 108 could lead to further declines. Next up, we've got spot gold. Gold extended its pullback from the multi-month high of 27.63 set on Wednesday, slipping below 27.36 on Thursday. Despite the release of US data, the 10-year US Treasury yield remained above 4.6%, preventing gold from regaining upward momentum. The precious metal briefly moved above 27.50 before the close. During Thursday's Asian session, gold retreated further, pressured by a rebounding US dollar and rising Treasury yields. Additionally, a bullish sentiment in the stock market reduced demand for the safe haven asset. However, lingering uncertainty around the US President Trump's tariffs plans could fuel market volatility and limit gold's downside. Technically, gold is expected to find strong support around 27.30 to 27.32, its 5-day moving average. A break below the 2700 mark could lead to deeper losses, with the 14-day moving average at 26.94 serving as the next target. Conversely, resistance lines at the 2763 and 2764 zone with a potential test of the October's historical peak around 2790. A decisive break around 2800 could signal further bullish momentum. Gold's near-term trajectory hinges on the interplay between market risk sentiment, US Treasury yields, and the dollar's strength. Up next, we've got AUD/USD. The Aussie dollar extended its gains on Thursday, approaching the key resistance levels of 63, supported by a weaker US dollar and improved risk sentiment. Market concerns eased after US President Trump revised planned tariffs on China to a less aggressive level, calming investor nerves. Given the strong trade ties between China and Australia, this development bolstered the Aussie dollar. Traders are now anticipating the Reserve Bank of Australia may cut interest rates as early as next month, with further insights expected from Australia's quarterly inflation report next week. From a technical perspective, the Aussie dollar is trading around the 62.70 mark, with a bullish bias indicated by the 14-day RSI slightly above 50. On the upside, the pair may test a psychological resistance at 63, with the next target near the 50-day simple moving average at 63.45. However, the US dollar could regain strength if expectations solidify around the Federal Reserve maintaining its interest rate at the 4.25-4.5 mark. This scenario could push the Aussie dollar lower, with initial support at the 20-day moving average of 62.17 and further support at the 62 level. Near-term movement will depend on risk sentiment and economic data releases. Finally, we've got the USD JPY. The dollar yen retreated from a 6-day high on Thursday, following US initial jobless claims data that signaled a cooling labor market. The Japanese yen gained support from a better than expected trade balance data and expectations of a 25 basis point rate hike by the Bank of Japan today. However, the pair remained near its 1-week low, with yen's bulls exercising caution ahead of the BOJ's 2-day policy meeting. Market sentiment was influenced by the expectations that the Federal Reserve may cut interest rates twice this year, limiting the dollar yen's rebound from Tuesday's 1-month low. Additionally, uncertainty surrounding US President Trump's trade policies and global risk sentiment may cap further yen appreciation. On the technical side, the dollar yen found strong support at the lower boundary of multi-month ascending channels earlier in the week and bounced back above the 156 mark, favoring bullish traders. Daily chart oscillators show positive momentum, suggesting potential gains towards the 156.8 mark and the psychological resistance at the 157 mark. A decisive break above 157 could lead to further advances to 1.58, but on the downside, support expected around 156, following by the 155.5 area. A breach of these levels could push the pair towards the 155 psychological mark. Well, that's all, traders. That wraps up today's market analysis. Thanks for tuning in. Don't forget to like, subscribe, and share for more daily insights. If you have any questions or comments, drop them below and we'll be happy to answer. I'm Adrian from BCR, and as always, good luck with your trades.